It's been a while since we actually spoke about SOFI on this channel. Now, over the last couple of weeks when I was busy moving into this place, I actually saw posts like this come up quite frequently on X criticizing SOFI and the management team. And I think this stems from a lot of the frustration, especially seeing Robinhood run. But after the last couple of days, ladies and gentlemen, crickets, absolute crickets. I mean, except of course for those of you who have been long SOFI. And in this video, we're going to be talking about two companies that we have been particularly bullish on going into 2025 and take a look at its performance year to date and also discuss what we can potentially expect from these companies in the second half of 2025. But as always, potential is a dangerous word, so let's dive in. Now, at the start of the year, I made a video saying that apart from SOFI, which is my top pick for 2025, I had three other companies which I felt made good investments this year. And since we are at the halfway mark of 2025, I thought it represented a good opportunity for us to take stock of where we stand so far. And so in this video, we're going to be talking about the first two of these four companies, and then we'll leave the other two companies for the next video. And at the same time, also discuss a little bit more about the future of this channel. Now, I think when it comes to SOFI, I want to be absolutely clear over here. Nothing has changed for me around the company except for the price. I think at least in my perspective, they didn't suddenly become a better company or a tech company overnight just because they're trading at $20 per share. I think they were doing the same thing back when they were $9 a share on Liberation Day as they are today at $20 per share. But I think it's also important to acknowledge that there are certain tailwinds that have shifted the narrative around SOFI going into the back half of 2025. And I believe right now what we are seeing is that people are just pricing in the potential for growth because of this shift in narrative around the company. But at least for me personally, when it comes to the tech platform, it is still as we were. I think 2025 is the year for closing deals. SOFI has told us previously that they're expanding their partnerships beyond just going after financial institutions, and that is exactly what we have seen. We have also heard from Anthony Noto previously that they're in talks with around 10 companies, and they already have two companies coming back to them which have previously left their platform, and after leaving Galileo's platform, they actually realized that, using products from all the other competitors, where the competitors actually beat Galileo is actually purely on pricing, but they lose out on functionality as well as the ability to scale, and that is why they're coming back. And I think that is bullish for the tech platform. But again, I'm going to tell you the same thing. The tech platform is expected to only have marginal growth in 2025. Like I said, nothing has changed about the company because we're already told that the deals that are signed in 2025 will only be recognized as revenue in 2026. Now, I have seen some people actually saying that the tech platform will start to accelerate and drive growth in the second half of 2025. I think for me, that would be a pleasant surprise, but it's not something that I'm, actively pricing into my valuation because, like I said, nothing has changed apart from the price. Of course, I think with the change in price, the sentiment around the company is slightly more bullish, which is why I believe we have some of these people coming out to say that the tech platform will re-accelerate in the second half of 2025. But we actually haven't heard that directly from management. Management has always told us expect this revenue to be realized in 2026. So this is not something I am pricing in. So there are three things that could potentially drive growth for SOFI going into the back half of 2025. And the first of these things being the student loan market. Now, correct me if I'm wrong because I didn't look at the big beautiful bill in detail. But from what I understand, that there are certain changes to the federal student loan system that is bullish for SOFI. Because SOFI has the largest market share when it comes to the student loan refinancing market in the US, and therefore with some of these restrictions and caps placed on the federal student loans, I think this will push more borrowers towards private lenders like SOFI. And if this whole big beautiful bill really does what it claims to do, and it reduces the tax burden on the middle class borrowers, I think this would free up more capital, and it's actually bullish for SOFI's other lending business as well as their loan platform business. Now, the second tailwind that I believe is going to drive growth for SOFI in the second half of 2025 is going to be crypto. And I think with SOFI's re-entry into the crypto space, I think it benefits their business on two different levels. Now, the most direct benefit will be through their financial services side of their business. And so as they roll out all these different crypto products, they now have 11 million members on their platform, which makes the cross-sell into their crypto products fairly easy. But I think on top of that, we have to understand Galileo is the technology that is powering their re-entry into this crypto space. And so because of that, Galileo, as they build out this back-end infrastructure for SOFI, is now able to offer and license out similar services to other financial institutions, and this basically expands their tech platform offering. Now, in the past, I've spoken about how SOFI's exit from the crypto space affected their products per member number back in 2023, and I think it's exciting for me to see how this number will start to rise in 2025 and beyond as they start to re-enter into the crypto space. Because if you have been following the channel for some time, you know that this products per member number is a number that we pay close attention to because we use it as part of our valuation process, and I'm excited to see how this changes their valuation moving forward. But I think what really excites me is that when you listen to the way Anthony Noto talks about the crypto platform, he really comes across as someone who really knows what he's talking about. I think recently he went on this long rant on X where he was talking about the Genius Act, and he acknowledges the good parts of it, right, where it actually modernizes the financial system in the US. However, he also had some reservations over the regulations in the Genius Act itself, because while he acknowledges that it protects the consumer, it also does stifle innovation for the company. But I think what is exciting really, like I said, is the depth of knowledge that he has around the crypto space, which makes me feel as an investor that whatever SOFI chooses to launch in the crypto space will be well informed. And I think under the Trump administration, the easing of regulations should come with time and hopefully address some of the concerns that Anthony Noto brought up in his long post. I think his core criticism about the Genius Act is the ban on payment of interest on payment stablecoins, and I think he views this as actually detrimental to the end consumer who would otherwise earn returns on their holdings, similar to interest-bearing saving accounts. And I think he really doesn't see how this is detrimental to the consumer, and he views this particular restrictions as actually protecting the incumbent banks, which rely on low or no interest deposits as a cheap funding source. And to Anthony Noto, even at SOFI, it is even more important that they are willing to embrace disruption, even if it means disrupting some of their own banking systems, because it means putting the consumer first. And Anthony Noto really is of the belief that with interest-bearing stablecoins, they are able to actually increase competition in the space as well as expand the stablecoin market. And I think the downstream impact of that is that it actually drives up demand for US treasuries. So one of the ways that SOFI plans to participate in the crypto space is to actually launch their own stablecoin in the back half of 2025. At least that's what we hope. And that will actually allow things like global transfers at a lower cost as well as at faster speeds. And I think previously Anthony Noto has suggested the possibility of issuing an FDIC insured deposit coin, which is something that will make SOFI's offering stand out from the rest of the competitors, because I believe this is not something that I've heard many companies mention before. And again, like I said previously, because SOFI may be releasing products at a slower cadence compared to Robinhood, therefore on the surface they may not be considered as exciting a company. I mean, Anthony Noto is not going to be flying out to France, writing on a chalkboard, talking to investors anytime soon, I think that's for sure. But when SOFI releases a product, we have seen with the loan platform business that whatever they release, it is usually immediately accretive to both top and bottom line. And that brings me to the third point, which is margin expansion in the financial services sector. I think we have spoken about the loan platform business quite extensively in previous videos, so that I'm not going to be talking so much about that. But I think as long as we continue to see demand in the loan platform business, I would not be surprised to see SOFI continue to expand their take rate in this segment, because we have seen in Q1 of 2025, because of the demand of their loan platform business, they were able to charge a premium, and I believe that is a trend we are expecting going forward. As long as that there is demand, they're able to charge a premium. But I think we also hope to see an increase in adoption of SOFI Invest as they continue to expand their access to private markets through partnerships with funds from Cashmere, Fundrise, as well as Liberty Street Advisors. And I think we know directionally SOFI plans to have SOFI Invest grow to become as big as SOFI Money one day, which means that it can easily double from where we are today. Now, finally, if you take a look at the third segment of SOFI's business, which Anthony Noto has once labeled as a $1 to $2 billion business within SOFI, which is their credit cards business, we saw in Q1 of 2025, for the first time in a long while, they actually increased their credit card lending after staying flat for a large part of 2024, and all the while lowering default rates. I think as they were tightening their underwriting process over the past year, credit card lending stayed flat, and we are actually once again seeing credit card lending rise while default default rates continue to drop. And I believe as they continue on this trend, this will actually shift the credit card business from a loss-making business into one that is a profitable segment of their business, which will once again increase the margin of their financial services aspect of their business. Now, all of this is to say that I believe what I've actually said at the start of the year can still come true, which means I expect SOFI to still somehow or rather by the end of the year, by December 31st, 2025, to at least reach $28 and something cents to break their all-time highs. And I believe if that actually happens, I would expect SOFI's management to want to continue to drive growth in order to at least reach the second tranche of their stock options at $35. Now, despite falling over 50% at the start of the year during Liberation Day, we now see SOFI up 48% year to date, and to me, I think that is pretty decent returns. Now, my second pick of the year actually did the best, with HIMS up 103% year to date. If you actually followed my commentary around this company previously, you would realize I let actually most, in fact, all of my shares get called away in the $50 to $53 range previously, and I was saying that I'm actually looking to re-enter the position in the mid $40 range. And so, initially when the stock actually ran all the way up to the $60 range, I thought I missed the opportunity. But with the ending of the partnership between HIMS and Novo Nordisk, that actually gave me a great opportunity to re-enter the position, now around $43. Now, as you can see over here, I have around $50,000 invested in this company. I still plan to get this share count up to at least 2,000 shares. But with the recent rise after the fall into the low $40 range over the last couple of days, I'm really not in a hurry to add, and I've been using options to actually size this position. So I have a strangle going on in this position between $39 and $61. And so what I'll be doing is that I'll be buying, I actually promised to buy 3,000 shares of HIMS at $39 if it falls to that level again. And for that, I actually received $3.24 per share. That would mean that if I actually buy 3,000 shares of HIMS at $39, the actually adjusted cost basis would be actually $35.76. Now, I would gladly own HIMS at $35 all day long, so I'm actually comfortable with this position over here. And currently, the covered calls that I have on HIMS are actually at a $61 strike, and this is currently sitting at an 80% profit, and I'll basically close this position closer to an 85 or 90% profit. Now, when it comes to covered calls, especially if it's that far out the money, I usually let the position expire worthless. But with HIMS being such a volatile stock, it's really not worth the risk and the stress. And so I was paid around $2.59 for my 13 contracts. So that's about $3,367. And at 52 cents today, I get to keep $2,691. So I think over a 2-week span, that is actually a pretty decent returns. But I think apart from all of this, there have been a lot of discussions surrounding the ending of partnership between HIMS and Novo Nordisk. And all this happened when I was moving, so I didn't really read too much into the whole situation. But now looking back, when I'm actually reading through some of these news reports, I think the whole situation around how the partnership ended actually comes across as pretty sketchy to me. But I think what I want to start by, not sugarcoating things. I think people that are completely brushing this off and saying that it's a non-issue, to me, I think that is being a little bit too optimistic. I think right now, today, we have to accept the fact that there is a much higher risk of a lawsuit against HIMS than before. However, apart from that, which could be an overhang on the company over the next couple of years, but apart from that, the other aspects of their business actually still remain the same. So when we did the projections for HIMS previously, I did not assume any growth coming from their partnership with one of the big pharmaceutical companies. And so this Novo Nordisk partnership was actually a bonus to the valuation, right? And right now, basically, we are reverting back to the original valuation, and that means with a 20% margin of safety, I believe the fair value we calculated back then was somewhere in the low $50 range, and I think we hope to end the year closer to the $70 range. So I think we have to acknowledge that, the ending of this partnership significantly raises the risk of a long-drawn lawsuit, a potential fine, and perhaps certain regulations being put in place that inhibit HIMS, but it doesn't really affect their growth trajectory and growth prospects, especially if you consider the fact that they have so many other health verticals that they can build out into. So if you have a long-term time horizon, this really shouldn't affect the long-term prospects of the business. And I think if you really think about the situation around the Novo Nordisk partnership and how it ended, I think there are a couple of things that I want to bring up which doesn't really make sense to me, or at least feel like, it makes me feel like the ending of this partnership was already pre-planned by Novo Nordisk. So I'm just putting on my conspiracy theory hat over here. I'm not saying that any of this thing is definitely true. I'm just reading into the situation, right? But like I said, not denying that there's an inherently increased danger of a lawsuit and some of the implications, but I'm just saying that it is really, really fishy. Secondly, on the 22nd of June, just one day before Novo Nordisk ended their partnership with HIMS, reports came out which actually documented how the new Novo Nordisk weight loss drug, I believe it's called let me take a look. CagriSema, whatever the name is, CagriSema didn't have the best test results. And I think their efficacy was only at 22.7% versus the 25% that was expected. And over 80% of their participants actually had mild to moderate side effects. Of course, most of the side effects actually diminish with time. But I think people were a little bit concerned because from 2/3 of the participants, they didn't even receive the full dosage of the drug. So they're not sure that if they receive the full dosage, would there be even more side effects? So naturally, people were concerned over the results of the new drug that Novo Nordisk was actually testing. And finally, just a few days ago, news reports came out that Novo Nordisk failed to make their patent maintenance fee payments in Canada. And now that has actually opened up the space for HIMS to enter Canada with generic semaglutide. Now, this is different from compounded version of drug. Generic drugs basically are drugs that are essentially white label. They deliver the same efficacy and they follow the same safety standards. So what are the chances, you tell me, that Novo Nordisk was already fighting this fire behind the scenes, failed to put it out, and HIMS stepped in and said, hey, you know what, we'll do it. Novo Nordisk looked at HIMS, got pissed and asked HIMS to stop, say, don't go into Canada, you're eating into our market share. HIMS refused, Novo Nordisk got pissed, and then they dropped this bomb. So to me, I think when I first heard about the ending of the partnership between HIMS and Novo Nordisk, I was thinking that HIMS must have really done something to piss off Novo Nordisk. I think the failed drug test by itself doesn't really give enough motivation for Novo Nordisk to want to end that partnership, perhaps out of embarrassment, or yes, you could say that they wanted to slow down the competition because of their poor results. That's why they are doing this. But some of these results were already being discussed back in March and April. So I was always looking for another angle to this, and we seem to have gotten it right. Novo Nordisk might have been pissed that, HIMS are so blatantly eating into their market share right in front of them despite being partners, and that is why they actually ended the partnership. Because if they had grounds for a legitimate lawsuit, and they are certain that they would win because they now have insight into the HIMS processes after being in a partnership with HIMS, they would have, not just released a strongly worded statement, right? They would have actually come out and actually filed a lawsuit. You don't just tell someone, I am going to sue you. You just go and sue them. And therefore, I think what it means is that there is not going to be any short-term boost in terms of HIMS earnings due to their partnership with Novo Nordisk, but the growth trajectory for HIMS in the long term is still on track. In fact, I think we now have to price in the growth of the Canadian market with the generic semaglutide. But as always, portfolio sizing is very, very important, and I plan to build out this position over time using options. Now, the cash position itself, it currently stands at around 10% of the portfolio, and I'm probably comfortable to take this to 15 to 20% and just let it grow from there. But there are two more companies that make up my top 4 plays for 2025. Now, one of these two companies is actually up 40% year to date, while the other one is down 40% year to date as well. And in the next video, we will explore what we plan to do with these two positions. And thereafter, I have a plan to cover 10 companies in 10 days, but more on that in the next video, and I'll see you in the next one.